Welcome back, guys. It's been a bit since I posted to this channel, but today we're going to go through Arista Networks. Ticker is Anet. Over the past 5 years, they're up 406%. They do computer stuff. They do a lot for data centers, so that's why they're benefiting so heavily from this AI stuff. And they are up 400%, which definitely outpaces the S&P 500. Incredibly strong performance, and on their all-time chart, super good performance. This company is a $100 billion company, and the price to earnings ratio is quite steep at the moment at 42, but they do have some pretty incredible growth in their revenue. We can see that right here. They went from 2.4 billion all the way up to 5.8. That is a double up, and their earnings are about 2.5 times more. So definitely super good growth. It has had a little bit of multiple expansion, but still, if they could keep up these growth numbers, it does seem that 42 might even be low for a price to earnings ratio right now. Their revenue growth has been stellar. They had one negative year in 2020, and in 2019 their growth did slow down to 12%, but it did reaccelerate in 2021 and going forward. The last quarter they were up 16%. It does look like their growth is decelerating, so probably expect maybe 15, 12 maybe in the quarters ahead, but it's also possible that they do reaccelerate growth later into the future. Their margins are also really good. Their margins have been expanding. They're up to 35% at the moment. Their balance sheet is very, very good. Negative net debt. They have zero debt and they have negative net debt, so extremely good balance sheet. Their cash flow statement, they don't really do much with the cash. They're not really buying back a lot of stock. They're not really paying any dividends, so we don't really have to take too much into account. However, I did hear that they're going to be doing some stock buyback this year, so we'll have to keep that in mind. Their stats, their ROIC is nice and high. Their gross margin 63%, very consistent, and their net margin has been expanding somewhat. They're up to 35. Last quarter they did 40%. So all good fun on the fundamentals. Their valuation is a little bit tough right now, but let's take a look at what they actually do. They basically sell these things. It's a bunch of data center chips, kind of. I'm not quite sure exactly what they do, but they are benefiting from AI. It's a lot of networking stuff. In their financials, they're saying that the total addressable market is going to be growing by about 15% a year. So that's quite strong growth in the data center market that they supply. And also, they have been taking market share away from Cisco, according to this chart. So if this trend continues, then Arista is going to be growing their revenue even faster than 15%. Based on the addressable market growing at 15%, and then them taking market share from Cisco, they'll probably be growing at like 20-25%, at least if their projections come true. Going to the analysts' projections, they're thinking $8 a share going to $9 a share in 2025, and then their revenue going from about 15% growth this year up to 7.8 billion, which is a 16% growth into 2025. Their stats, we could check their short percentage as well. At 1%, that is very low. That's a total green flag for this company. Let's look at the model that I have for them. Now, this model might be a little bit I don't think it's like hyper optimistic or anything. We could definitely make this more optimistic. I put their estimates here. Buybacks, they don't really do any buybacks. I mean, they do a little bit, but we'll just say it's negligible. Their net debt and negative 5.4 billion, discount rate of 10% because I want a 10% return on all my stocks, and an exit multiple of 22. I think that's fair. It's a lot lower than what they're trading at right now, but after 8 years, their growth is going to slow down. But I think 22 is still fair. And so for the growth, I have their earnings growing by 20 and then slowing down to 12%. Historically, their earnings have been growing about 20% a year. So this might be even low for what they've done historically. And their fair share price comes out to 288. And in terms of their revenue margins model, I have their revenue growth at 16% this year. That's kind of what they're projecting, and then or into next year. And then I have their growth slowing down to 15 and 12, 10%. But with their projections, with them thinking that the total addressable market is going to grow by 15% a year, and they're going to take market share from Cisco, then we could definitely see this growth higher than 15%. And their profit margin, I have it expanding up to 40% and sticking around there. Those are very, very high profit margins. And so if they can continue to do 40%, I think that is quite good. Their fair share price, according to this, would be 287. Now, there are some more optimistic scenarios we could make. We could say that their growth accelerates back up to 20%, which could happen based on their projections. And we say that, then their fair share price jumps all the way up to 403. And in that case, you could probably expect like a 12% return. Even higher than that, maybe 14 or 15. Yeah, maybe about 14% return. Like, I definitely think that this company will continue to outperform the S&P 500, at least for the foreseeable future. Now, if we do have a slowdown in AI, or if AI was just all hype and we have a slowdown in data centers, then the growth could possibly be negative 1 year and then probably would go quite strongly out of that. But I think overall, even with its valuation today, I do think it's solid. I do think that you'll outperform bonds in this stock. So yeah, a lot of good things to like about it. I don't currently have a position, however, wouldn't be really opposed to it. Let me know what you guys think in the comments, and make sure to hit that like button. I'll see you in the next video.